No. Yes. Hey guys, welcome back to the After Hours. I'm the ATL Beast, and today we're going to talk about the difference between the stock market and crypto. Before we get into it, I want to talk about upgrading your setup, upgrading your trading tools. The reason I mention this is because my birthday just passed, and during my birthday, I have a ritual. I throw out a lot of my stuff. I'm talking about clothes, toothbrush, old cologne, deodorant, and all kinds of stuff. It's pretty much a spring cleaning, except it's an annual thing. Well, the same thing needs to happen in your trading. Every 3 months in your trading, you're gonna have to do some type of evaluation. That's mostly gonna be for your position size, and that's gonna be a level of risk management. You're also gonna have to have more management when it comes to your trajectory inside of trading. Some people may have started out in futures or Forex. Now they're interested in the stock market. Well, that's a big change, and that's gonna require you to change your broker.
Interested in trading like Steven Ducks? It all starts with choosing the right broker. Ducks Trading has partnered with Centerpoint Securities to supercharge your trading journey. By joining Centerpoint Securities through Ducks Trading, you can unlock CP Edge, a suite of top-tier trading tools valued at over $6,000 right at your fingertips. Gain an edge in your trading with real-time scanners, cutting-edge news, and a personalized trading journal. Experience trading like never before, with superior short inventory, dedicated support, buttery smooth trade execution, and the opportunity to earn interest on any of your idle funds. Plus, enjoy competitive pricing that suits your trading style. Ready to elevate your trading? Simply click the link in the description below to get started. Now, let's dive back into the content.
So one of the upgrades I'm making is going from TradeZero to Centerpoint. Centerpoint is the better option, but most people wouldn't be able to afford the 25K minimum. So when it comes to my small accounts, I'll stick to TradeZero. Now you're probably thinking, Dantes, what is your beef with your broker? Now every broker and every charting platform has their glitches, but I've had my fair share from TradeZero. But with Centerpoint, I have a clean record so far, and I've heard nothing but good things. Now if you want to know more about Centerpoint, you can check out the link in the description. Now, speaking of upgrades, there's another upgrade that happened, and it just happened to be around my birthday. It's something that needs to happen every 3 to 4 years because technology is quick to be outdated. Out with the old and in with the new. Happy birthday to me. All right, with that out of the way, let's get into it. We're gonna talk about the fundamentals, the technicals, the trader's edge, the trader's dilemma, the big problem, and then regulations. So when we talk about the stock market, we understand that it's a tool used to transfer money. When we talk about the fundamentals in the stock market, that usually falls under the management of the company, the reputation of the company, the amount of supply that they have. We're talking about their products, their services. How much supply did they put into the public market? So when we talk about the stock market, you have to understand that we're talking about publicly traded shares. When we talk about shares, we understand that this is just a piece of paper, and this piece of paper is worth a portion of the company. In the primary market, that's mostly just between the business and the investors. Now, at some point, maybe you don't want to hold on to X amount of shares. So you took some of those shares and you sold them onto the secondary market. This is the secondary market shares for that company that is out there in circulation between the traders. That is the float. The overall amount of shares is going to be the outstanding shares. And then you're going to take the outstanding shares and multiply it by the stock price to get the overall worth of the company, which we call the market cap. When it comes to the fundamentals, it's all reputation and having the public lift you up. We're talking about, do you have good managers or bad managers? Whether the public likes you or not, in terms of your reputation, your mission. Do you have connections? And what rank are you in terms of your industry? All of that at a fundamental level. Then it goes to the next step, where's technicals. With the technicals, we're going to be dealing with volatility. And the only thing you have to worry about is managing your risks. Now, why is crypto so popular? Well, fundamentally, people are rebelling. They want a digitalized economy because crypto is a decentralized digital asset that's backed by blockchain technology. There's a bunch of computers out there and they're all connected to each other. With a single chip, it's mining Bitcoin. They gave a value to it. Some of it is worth just as much as gold. It got so ridiculous. A couple years back, we had a shortage in microchips. So there are a lot of people out there that just want to be in crypto because they think it's gambling. And a lot of people have won big from that gambling. Not only is it gambling, people think of it as an investment because they think that this is based off pure hype and it's directly related to the economy. The problem is its fundamentals are flawed because there's no regulations. So no matter which one you go to, there is a risk involved. But when it comes to crypto, I feel like it just doesn't have a bottom. At any point, someone could just pull the rug. Now, this might be my insecurity speaking because of the experience with the guy that just went away with $100 billion. The idea that someone could just disappear overnight, I'm not about that. Statistics say up to 24% of the coins are showing signs of a pump and dump scheme. Last one we saw was Ethereum and Luna coin. One of the biggest scandals that we saw FTX with Sam Bankman-Fried after he was probed by one of his biggest competitors, Binance. We're going to talk about what happened this week. When we look at PIK, you have to understand that this is a bounce short. We have some type of historic resistance. This does have a aftermarket that is pretty high, but since the aftermarket, there was a gap down overnight, which means now it's a downtrending chart. But even with that downtrending chart, the stock went up again and it tested some of the resistances that were overnight. Whenever it comes to aftermarket or pre-market, the resistance is pretty much non-existent, but it does help when it comes to momentum. Now, why am I mentioning this? Well, last week we had a minimum bounce short on PIK. If we look on the daily chart, this had 30 million volume all the way up to $10. Well, overnight we had a gap up to $7. We saw there was a minimum 40% push. We normally aim for 50%, so we have more reward because we understand that as the retail market trades these penny stocks, there's a neutralized area that goes across all penny stocks and is usually somewhere around $2. So we want to stay away from those very cheap stocks as much as possible because things get crowded. And there's an unspoken rule that I'm speaking about that people just don't trade those really cheap stocks because they're too dangerous. We also had a gap up short on MDIA. It was into a consistent resistance and we traded that. We scaled in on confirmation, waiting for the stock to reach its high for a second time. When we did that, we understood around the $5 area, there was a consistent resistance. There's nothing obvious, but there is a line of a lot of daily price action around that area. We used it as a flat resistance around the $5 area. When we look on the daily chart, before the reverse split, there was a lot of price action around this area. Now, on that day, I traded that gap up short. It made a little bit of money. When it came to MDIA today, it was a bounce short. If you asked me last week, it was a gap up short. Now, the resistance that we used today, it was last week's volume. Now, last week's volume, we were using the historic volume where it was a consistent resistance. If we look on the daily chart, there are several points around the $5 area where it was tested when going up as well as tested when it was going down. We used that area as a consistent resistance. Now today we used the volume from a few days back. Now that volume, we used it for a bounce short. We see that it had 50 million volume in the first hour. So we know this ended up with something closer to 100 million. So it really didn't matter. As long as it stayed under that resistance, it was good. Now let me answer one of my common questions. Can your strategies work not only in the stock market, but also in the crypto markets? You have to understand, most of these strategies, they're all based off the same concept: managing your risk, finding liquidity, finding obvious points of resistance and support, and then creating risk-reward ratios, probably recycling shares, using a market or limit order, and then proceeding to scale in or scale out. So yes, they can. When it came to the trader's edge, we understand that crypto and large caps, they move very slow, which means people can use leverage. We're talking about a lot of leverage. When we talk about leverage, you have to understand, you have your cash inside of your broker account, and then they give you a margin account, which means that you can borrow from them based off of how much leverage that you have. If you have ×4 multiplier for leverage, you can use up to 4 times your money inside of one position. There are brokers out there that are willing to spot you that money to use, but not to lose. There's 2 ways to use leverage. 1, you can spread it through multiple positions. Or 2, you can use a heavy hand. That's pretty much really high risk, but also really high reward. Most people choose the really high risk and really high reward on both the stock market and the crypto markets. This is why 90% of people lose. At any point, news can come out and the stock can go against you. And if you're over leveraged, you just pop instantly. So another trader dilemma is when we look into crypto losses, you don't really learn anything from that. But when it comes to the stock market, usually you have a strategy. You can use the same strategy in crypto and you can learn from those losses. Well, if you're a part of a pump and dump inside of crypto or just one of those coins that were fake, what do you learn from that? What if you followed your favorite social media influencer and then one day he got out at the top, or you and him lost all your money because the scammer decided to dilute the stock to 0, or What if the whole time you were only trading with the 10% of the supply that was on the market, and the person that owned the 90%, they just diluted it? That's how they do the scheme. Now, before, my worry when it came to crypto, it wasn't being diluted to zero. It was actually someone getting to a specific arbitrary number and then just taking everyone's money, and we have no clue who it was or where they are. Now, that's because of the whole Bitcoin. Now, because of that, you'll never see me dealing with Bitcoin directly, but I do have experience trading the brokerage itself through the stock market. We're talking about Coinbase. During that time, I started to see news about FTX and Binance and how they were kind of poking fun at each other until one discovered fraud. And then guess what happened? Well, everyone at FTX and all the coins related to it, they went to zero. Can the same thing happen in the stock market? Yes, anything can happen in the stock market. I say it all the time. There could be a halt. There could be a T12 halt where it's a permanent halt. But usually there's some type of insurance with all that. Well, in crypto, there's not. Now, to be fair to crypto, they do have some type of insurances, but it's usually on the broker level. Well, if the broker blows up, what are you gonna do? The way I see it, it's just a huge, large cap stock. And because of that, it has its tiny fluctuations. And some days, there's more liquidity than normal. So you can use the same strategies that you use in the stock market inside of the crypto market. It still doesn't feel right that there's very little regulations and that anybody can just put in 100 times leverage. That's just a little too much for me. But all right, guys, that's all I got for you today. If you like what you saw, hit the like and subscribe button, and I'll see you in the next video. Peace.